Hello, happy holidays to everyone. Today is the 23rd of December, 2023. We always do our disclaimer, go over our calls, and then we'll make some predictions. It's my trading plan for 26th of December, 2023. Please trade at your own risk, because my calls can be wrong. Look for the pattern with the early low regardless of where we open. This is what this is, and I think that on Tuesday we'll also have the same pattern, same change in trend times pattern with the early low. We had a new price target generated from Friday's patterns, 47, 66, 72. The rules say if we don't gap down smartly it should print, but I'm not certain it will, and we'll go over the reasons why. We looked for a pattern. Here's what we said on Thursday night. We said the commonest thing was a gap and a prompt move outside the day's range. And we certainly got that. We had this optional price target from December 21st. It didn't print, so we'll forget it. We had a required target that's 47.0834, but we gapped smartly in the undesired direction. So according to the rules, the price stays, but not the time, and we'll just have to add this one to the list. We've had a large number of unfilled MEJT targets lately, and I think we're now up to 12, and the most I've ever had at any one time during the year is 12, and that's over the last 21 and a half years. So I think it's pretty clear that pretty soon some of these numbers are going to print based on past history. Well, during the day, MEJT doesn't believe this drop gives us a higher target. I'm not certain that's going to happen. We had the top right when the Marks indicators called for it. This is a drop on high volume. This is a recovery on low volume. That top is staying. I don't think this recovery changes anything. We had 5 waves down. That was an impulse. We said we were in a wave B, and it's possible that it's completed. We'll go over why. And if it has completed, we should have a wave black C, which should be similar to this A. Now I'm saying that wave black B is an A, B, C pattern. And if you look at wave light blue B, you can see there's an A in gold, a B, and the C, and wave C in blue B is exactly equal to wave A. So in wave black B, we now have an A and a B, and it's just waiting for this blue C of black B to complete. And when this up move completes, that'll be the end of B, and then I'm looking for a wave black C comparable to this black A, which is a pretty steep drop. Now, it could have ended here because wave blue C of black B is exactly 50% of blue A. We also have a wall with gap pattern, and these things do fill at some time, and typically they fill pretty quickly, but if it hasn't filled by now, it doesn't have to fill quickly, but it does fill at some time. Well, this is a rising wedge pattern. Hasn't broken yet, but when it breaks, it can lead to some pretty good drops, often a Fibonacci retrace. We also have RSI on the daily chart way over bought. If you look, when the market nears lows, RSI tends to get oversold. And when it's near high, it tends to be like this, upper overbought. It's not a pinpoint indicator. It doesn't tell us what happens tomorrow. It just identifies the particular area. Longer term, we've completed a major magenta ABC. This is a wave 1 of some degree, but don't forget wave 2 often corrects a significant percentage of wave 1. Doesn't change the bullish long-term picture, but when this is over, it can lead to a pretty steep drop. Tuesday's pattern has a really low, regardless of where we open. These are the patterns we should see next week. Next week is one of the year's most bullish weeks, and there's a higher MEJT target from Friday's trade. Nevertheless, the elements are there for the start of a sizable decline. It might be delayed because of seasonal influences, but seasonal or not, I don't see anything preventing it from starting now. Wednesday's high volume, impulsive decline was followed by a low volume, overlapping recovery. Sentiment indicators showed too many pulls. There are too many lower MEJT targets. We're in a rising wedge. RSI is overbought. None of those things are good. We're all familiar with spiders, SPY. It's a ETF which trades the S&P 500. Now, I'm no expert on spiders, but my understanding is that unlike other stocks, there is not a fixed number of shares of that ETF. And when people sell shares, they can just sell the individual stocks, and when they buy shares, they can just purchase the individual stocks that make up the index. And one day last week, we had the greatest number of money inflows, new shares purchased, that is, of spiders. Apparently that's ever happened. And sentiment indicators like that deserve to be punished, even if they aren't punished immediately, and even if the long-term picture remains positive. So the Grinch might come as early as next week, but if it isn't exactly next week, it shouldn't be too much longer than that. We're looking for the pattern on Tuesday with the early low, regardless of where we open. The rules say if we don't gap down smartly, we should see 47.66.72, but I'm not too certain we're not going to move down sharply. I mean, we broke out here, couldn't top this high. All we do is retrace the big drop with an overlapping retrace. That's the impulse. That's the recovery. It didn't top this. When this is over, there should be another drop like this if I'm reading the pattern right. So it's the pattern with the early low, and that's today's call.